Okay, let's go ahead and book July. In this case, we will book everything using general journal entries just to demonstrate how it could be done quicker than going through the steps that we demonstrated before. And again, general journal entries are a very cool way to basically book anything you really want. Okay, so let's get going. So first we have our food traders. Again, let's make sure we have our dates correct. 7/12/2020. All right, the invoice number will be our reference. Okay, so first we know it's paid with a credit card, right? So our credit card account will be credited because liability goes up. All right. And what else is happening? Our expenses go up. So our food purchases go up and expenses go up when debited. And again, we don't need to reflect it here because beautifully, again, journal entries interface gives us debits and credits, right? So this amount right here is a debit to account 6200, and it is a credit. This amount is a credit to account 21,100. Dates are correct. 7/12, credit card, all good to go. Let's move forward. And we could add the name right here in case you're wondering. So just to affiliate it, give us additional piece of information right here. All right, next one is to go packs, 7/14. All right. Again, this one is a credit card, and it will be credited. It's a liability. Liability goes up when it is credited. We can add the name. All right, and expenses, right, on food, on supplies, restaurant supplies, will go up, and expenses go up and debited. So again, we have our debits and credits. Good to go, right? We know what's being debited. We know what's being credited. Expenses being debited. Expenses go up when debited. Makes sense. 6,100 will be increased. And our liabilities go up when credited, right? And account 21,100 will go up as well when it is credited. Next one, we paid with the check. Again, let's make sure we reflect the date correctly. Okay, we can put it right here. What's happening here? Well, we have our cleaning supplies. That expense goes up. That has to be debited. And we know that our bank account balance will be reduced, right? So our bank will be reduced and it has to be credited in order to be reduced. And one more thing that, when we're dealing with checks, we might want to, instead of using the invoice in the journal entry, we can still put invoice in the description, right? We can put the check number right here. So when we reconcile, we can easily recognize it. So let's substitute it, right? Again, the expenses go up, they're debited. Bank account balance goes down, it is credited. Okay, next we have our soft drink. Again, let's make sure we reflect the date correctly. This one is a credit card transaction. All right, again, we know that expenses, drinks, right, drink purchases will go up. Therefore, it has to be debited. Okay, soft drinks, here it is. What else do we know? Well, we know that our liability, our credit card balance will go up. And liabilities go up when they're credited, right here. Okay, so here it is. We got our debits and credits. They are in balance, right? That's what we want. Date is correct. Let's move forward. All right, we have our utilities. Again, let's make sure we update the date. Okay. We know that our utilities expenses will go up, therefore we have to debit them. And we're paying with check, right? So let's transfer the invoice number into the description and input the check number right here. And then our bank account, right, will be credited because it is an asset, and assets are reduced when credited. So here we are, date, everything is good to go. All right, and then we have our big lease, the complex one that impacts multiple expense accounts. Again, let's make sure we put the check number in here. Again, our bank account will be reduced, so we can get that one out of the way. It has to be credited by the total sum, right? And then we can enter the invoice number right here. Okay, now we're going to impact all those expense accounts, right? So first we have our rent. Okay, expenses always go up when debited. Okay. Next one, we have our insurance. All right. Then we have our dues and subscriptions. Okay. And then we have our maintenance. And we have our promo work, so that's advertising and promotion. We're paying for it over time. Again, that's the remainder, 95. Okay, big lease. Okay, here it is, right? Debits, credits. On this interface, we have everything shown to us, right? Expense accounts go up when debited. Therefore, all of these amounts are corresponding debits to these expense accounts. And then, since we're paying these expenses with a check, our balance on our bank account will be reduced, and the bank account being an asset is reduced when credited. Okay. Okay, and we're done booking invoices for July. Okay, let's go ahead and book credit card transactions and receipts for July. Again, we're going to continue using journal entries just to demonstrate the power of this tool. First, we have our gas station. All right. So here it is. What do we know? We know that fuel expenses go up, right? Expenses go up when debited. We know that much. Okay, we can add the name just, for future reporting. What do we know? We know that we're paying it with a credit card. Credit card is a liability. Liability goes up when credited. So again, debits and credits are shown right here. Beautiful. Okay, gas station. They're in balance. Debits and credits are in balance. Again, expenses go up when debited. Liabilities go up when credited. So we're paying this expense with the liability with the credit card. Therefore, it makes sense, right? Expense goes up. Liability goes up. Okay, next one is pretty much identical, just a different date. Okay. Expenses, fuel, just like before, right? Goes up when debited. Just make sure we got the correct amount. And then our credit card right here. Okay, we got our debits and credits. Everything is good to go. Dates are fine. All right, let's book it. Okay, we have an order receipt from Online Market. All right, what did we order? We ordered some management books, so that's our training materials, right? And then we got some books for kids and toys for kids. That's probably a draw, right? That's for personal use. Doesn't seem to be applicable to a food truck. So let's go ahead and book this transaction. So make sure we have our date correct. Okay, 748 ZW49. Okay, this is good. What do we what's going on here? Well, let's get one thing out of the way. Credit card is being impacted, right? Credit card is a liabilities. Liabilities go up when they're credited. So let's enter the total right here. All right, let's put the transaction, and that's from our online market. Online market right here. Okay, what else is happening? Well, we have two elements here. We have a draw and we have training materials, and we have to allocate sales tax accordingly. We've done our homework. We've done the allocation in the back of the napkin, so we're just going to enter it. So our draw, and that's the kids, toys, and books, right, with tax adds up to $130.50. Right, what else is happening? Well, we have training materials, right? Those books. We want to learn how to do bookkeeping. We want to know how to do some management. So we went, and again, with tax, it adds up to $364.31. So here we are. Let's make sure we enter the online market right here. Okay, so here it is, right? Debits and credits are depicted. Liability goes up, right? It has to be credited to go up. Draw essentially is an equity account. It offsets equity, so our equity is reduced when it is debited. So it makes sense, right? We're taking the money out of the business, so our ownership is reduced by $130.50. And our expenses on trading materials go up because debits increase expenses. So right here, we're good to go. All right. Then we have our credit card payment. Again, we can book it right here. All right. What do we have? So we're moving money from our bank, right? So we know that bank account will be reduced when credited, so we can enter that. All right, let's enter the description right here. Again, we're paying our credit first. All right, so that is right here. What else is happening? We are reducing our credit card liability, and liabilities are reduced when debited, right? Okay, so here we are, right? We have our debits and credits. Makes sense. Liabilities are reduced when debited, and that's what's happening. And assets are reduced when credited, right? And that's what's happening. Our bank balance will be reduced because money will leave it, but at the same time, our liability will be reduced because we're paying off part of our credit card. Okay, good to go. Saving you. Okay, we're done booking credit card receipts at this point, and July is complete.